Hey guys, I'm back. It looks like I had a bit of an issue and got kicked out of the room. I don't know why, uh, but there you go. I think I'm back, and I'm not sure what stage I cut out. So I welcome you all again, and thank you for joining Trading Buddies for another week. Ash will be with us shortly, of course, and I think Simon will be joining us as well to talk about Bitcoin and how we can trade it. I think that was the topic of discussion for today and what we should be looking at, of course. But first up, as always, we will begin with the pound versus the US dollar and see if there's a worthy trade there for us to participate in. Now, I've still got Thursday's breakout order in place. And clearly, we ain't gone nowhere. We certainly haven't broken out of that range. Went close there on Friday, but nothing was yet. So what I've decided to do is, because we've got a smaller range today to trade, we're looking at Friday's range plus today's. Obviously, today's inside Friday, so we'll be only looking to trade Friday's range. I'm going to cancel the order that I've got in place. So let's get rid of that. And then we can go back into OCO mode. But I'll get the levels first. That's probably a good idea. So I'll be going 5 pips above the high of the range being here. And we'll be going 3 pips below the low of the range, which is here. Right, so the high here is 1.2320 or 1.2321, as it turns out. We'll go to 1.2326. So 1.2326 will be the long entry. Those of you who don't know what I'm talking about, I'll explain it for you in a minute. And the stop loss on the long entry will be underneath that bar less 3, so 122.37. 1.2237 will be the stop loss for the long. It'll also be the entry for the short. Righto, so to set this up, just to be lazy for me, I can do a few things that'll make it good. If you've got a trade manager, you may not know of this one. Enable OCO will be the one that you need to change. It will be defaulted to false. You need to change that to true. And you need to go down to buy at entry level 1 and change that from false to true and put in the value. So we're going to buy at 121.58 is what we had before. Obviously, that was a sell before. So the entry level is 1.2326. And the stop loss on that, as we said, is 1.2237. Rightio, that's really all we need to do at the moment. We can amend everything at a later date for that one. Now, we're selling at entry level 2, so we change the buy to false. Sell at entry level 2 becomes true, and we put that new value in there. Entry level 2 will be the stop loss for the long, right? So it's 1.2237 is the entry, and the stop loss will be the entry for the long, which was 1.2326. Don't worry, I will explain all this, guys, if you haven't seen it done before. As I say, that's all we need to do. We can set targets there and all the rest of it, but I won't do that just yet. I'll amend it later on. So we'll just click OK on that, and it will ask me a couple of questions. First question is, do I want to buy at entry level 1? Yes, I do. And the second question is, do I want to sell at entry level 1? No, I don't. The next question is, do I want to sell at entry level 2? Yes, I do. And it has placed the order. So we're entering here. Now I can explain to you guys who haven't seen this done before. It's called an OCO, which means one cancels the other. In other words, if the long position is triggered, then we would cancel the short position. And if the short position is triggered, we would cancel the long position. That's all that means, nothing more onerous than that. Now, what I would say, if you are thinking of trading this, this is an unproven system of trading and therefore carries far more risk than would normally be the case. So I would suggest that you either, g'day Lewis, how are you, mate? Happy New Week to you. I would suggest you don't trade it at all, or if you are going to trade it at one micro lot, or what the least amount you can possibly trade it, because it is unproven, as I say. All right, that is all we need to know right now. Again, for the people who haven't traded this before, we were looking for a 1-to-1 risk to reward ratio, and we would then take our first profit, or we'd simply move our stops to entry so that we have no risk on the table and maybe let it run. We can do that when the time comes, if the time comes. And from then on, we would trail on the hourly chart to buying bars if we get a long entry, or to selling bars if we get a short entry. Now, if that's too convoluted for those of you who are new, then don't panic. This is just something that we're working on, and may take, it's taken already a lot of time to get it to the point where we want it. And that's pretty much it. Update for those of you who have been following the Aussie Kiwi trade. It's back at entry. We have taken our first profit here on Aussie Kiwi. I'll give you the option of getting that safe or otherwise. I've chosen to trail my stop above Thursday's candle, which was a selling bar, as you can see. We entered here on this one, which was really a bonus entry, if you like, because the real entry was this candle here, which of course didn't trigger in before this was formed, and therefore we moved our entry from there up to here, stop loss from there up to here. Now we're trailing stop down to this bar. So a little bit of risk on the table, very, very little risk left in this. But if you wanted to get it safe, then that's entirely up to you. You've got the monthly pivot protecting you there. You've got the weekly pivot protecting you there. But the real level I'm interested in is this one here. And if we can get clear of that, I think we've got a decent trade on our hands. And that's why I'm giving it just a little bit more space than would normally be the case. Of interest today are 3 pairs. We can really have a look at that on the weekly game changer bars. And the first up is Euro CAD. Now, I've been through this a couple of times already. Oh, goodness me, I've got to get rid of these things. Who designed this? It doesn't work for me, I can tell you. I like my own channels, not someone else's. None. There we go. That's much better. So with EuroCAD, those of you who've been in this room for quite some time will recognize that I'm a massive bear on EuroCAD and have been forever, and was in a EuroCAD short. Why am I not still in it? Don't know. Trailed and stopped too tight, simple as that. I was in this short for 11 months, and I think it was 4 days or something like that, longest position I've ever held. And now it's set up as a short again. Do I like it? I've got to say it's not my favorite trade. And the reason is not because of the bar. I like the bar, and it gives you a good reward to risk if you want to take that risk and trade underneath that bar, put your stop loss there. And that may well prove to be a very good thing to do. Problem here is I've got a structure that is telling me we're going to here before we go to here. And for that reason, I would have to put my entry there and my stop loss above this level, which doesn't give me a great reward to risk on exactly what we're seeing at the moment. So that's why I've opted not to take that one. There are 2 more, one of which I have taken. Kiwi CAD is, actually, no, I took another one, which I'll get to. This one here, not dissimilar to what we've just described. But again, the reward to risk here is pretty poor. You'd have to enter there, put your stop loss there. And whilst I agree with the direction, I've got to wait for a better entry. So if price gets up to here, gives me something that I like, then I can trade it, but not at the moment. Pound CAD is one of those little creatures that we look for all the time. And it is really a grand setup if you've got it into context. The context here, however, is poor. And the reason I say that is because we've got a massive bullish engulfing bar there last Wednesday, 3 weeks ago. And that's followed up by an inside bar. Now, in context, that's a great setup, but the context needs to be in line with the major or dominant, either A, trend, or B, chart pattern. Now, the dominant trend here quite clearly is not bullish. In my humble opinion, it is quite bearish, actually. And, you know, pardon the market scanner being over this this chart, but there's a good reason to think that this has still got room to go down. Interesting that it's been ranging for about 6 years. Yes, 6 years. Tends to do that once it gets into a range. It ranges for quite some time. There's a hint that we have got a false break of that range, which tends to agree with the Game Changer Plus bar, which is telling us to go long here. But gee whiz, I find that difficult to take on board, to be honest, given, well, I think the CAD's got far better prospects than the pound, I'll put it that way. But, you know, the setup is there. It's telling us to go long. I'll ignore it because it's not in context, but it is giving me that hint of direction. So what I would like to do is wait until I do get a reversal scenario and then look to trade it long. But I don't have that at the moment. Yes, you could say we've got a reversal pattern on the weekly in that big bullish engulfing bar, and I'm all for that. But that would need to confirm in a higher low for me to trade it. And the daily is where I'll be looking for that to occur. So have I got a reversal pattern on the daily? I don't believe I do. So I'll probably be waiting for a double bottom or something like that. Maybe a head and shoulders to form over here. It'll be a very flat one, but I'm talking days from now. So I'm pretty much ignoring that. The order that I have placed this morning is Euro pound short. Now, again, I'll bring Ash in a minute as well. But Ash has been telling me, and it's pretty obvious to see that the pound isn't in great shape, and it's about as reliable as our good friend Boris, who's in more SH1T, as I understand it. He's unbelievable, that guy. He gets in more trouble than what's his name? Speed Gordon. What I like about this one is not necessarily the candle pattern setup, but this scenario here where we have, and some would say that's a bullish chart pattern, and that's fine. But at the moment, that chart pattern or structure, if you like, which is a descending broadening pattern or whatever you want to call it, but it's a structure for mine. And we've come back underneath it and had a second rejection of the top of that level. There is a horizontal level running through there as well. So I'm actually looking for this to go short and, you know, down to here makes sense to me as well. So it could be a bit early, and the candle's a terrible candle, but it is pretty much a break and retest of the crossover, the weekly pivot. Does that mean something? Maybe it does to some people, but it's really a retest of that level there, which is what I'm considering to be the start of a sell-off. So early, it is early, very early, but I do like that as a directional bias. I think that's pretty much as far as I want to go at the moment. I do have 3 others on the watch list that we'll get through a little bit later, but I don't think.
Yeah, mate, can I quickly grab the screen, because we might have a possible short on the FTSE. I've just jumped into it, so I'm just going to bring it to you guys.
Go hard, mate.
See what we think. What do we need? We need this, don't we? Yeah, I've just taken a little short up here on the FTSE, and to be honest, I'm starting to build back into the short. So I've got a short down here as well. But I've just taken another one. I see this resistance point here. The FTSE's had an amazing run. Let's just have a look at this on some longer term time frames. You'll notice that I've got some shorts, some longs in the market right now. So if we first have a look at the daily, I've got a big short up here, a couple of longs here, and now I'm sort of building into a couple of shorts down here. And what I was looking for was this as an inverted head and shoulders. You know, I looked at that and I thought, okay, left shoulder, there's the head down there. Price is going to probably at some point come down and form some sort of right shoulder down here. You know, this does look like it now may well be the neckline along there. So price might well get up there before it dips. But I think because of what we've got going on, the chance for dips are quite high. So I think that this is a relevant area to try and take a short on. Now, obviously, it's a difficult one because we don't really have a comfortable area to put those stops. So my suggestion would be if you're going to use stops on this, give it some room. You know, give it maybe 20 pips, 25 pips, maybe even 30 pips from entry, because this level down here looks good, and that's 100 pips away. But the daily pivot looks really good. Daily pivot's around about 80 pips away. So I think at some point we test this area. Now it might not be here, so it's tricky right now, and you know, people might be waiting for the correct price action for them to aim for. But my general sentiment this morning when I woke up, I thought, right, I really I want to get short. But considering the price action we saw Friday, which is basically all this, you know, the move to the upside was amazing. Really, we ended up going up 200 pips. So we're talking about a 3% move nigh on the FTSE in a day.
It's a decent short cover, isn't it?
Yeah, it certainly looks like it, mate. And obviously, you know, there are going to be these rallies. We are going to see these rallies in the markets. And you've seen this the same with the NASDAQ, which I have to say, last week you were saying about the NASDAQ coming out and you were sort of a bit concerned whether you came out a bit early. I think you came out exactly the right place. You know, the NASDAQ has rallied.
Yeah, it looks like it now.
Yeah, it's rallied pretty well. But we're in a downtrend. You know, there's no question that we are in a bearish market here. Are we at a level of resistance on the NASDAQ? I think we could argue we are. So
yeah, I would that trend line.
Yeah, I mean, I would anticipate the NASDAQ coming down again, and whether it tests the absolute low is questionable, but I think it should test this breakout point. And the difficulty with this, I mean, you know, if I think about what markets tend to do, what the structure of markets tend to be, when they're going in a specific direction, they tend to test an area they've broken away from eventually. And if we look at an example of that, then we're looking at this area here. Whoops, wrong color. This area here.
Lewis is onto it. He wants to short it too. Yeah, I'm keen, mate. I'm keen.
Well, that area there, I mean, you could say it's a little bit lower, maybe there. So this area does sort of, it gets a little bit of a sniff there. It comes down. Eventually, it breaks the low, comes back down, tests the area, then it breaks through the area. So really, then you're looking for this area to be tested if we're going long. It does test it and actually goes through it. Then it goes through here, comes down, doesn't test it at that point, but it does test it here. Same thing down here. At this point, this is the break point. So you'd be looking for this to come back and test it. The big problem that we've had is that over the last 2 years, when the markets have decided to go long, they've just been V-shaped. But buying, they've just been jettisoning them the way back up again. But what's quite interesting with that is that if you change your time frame and start to look at the weekly as an example, then it completely sort of, you know, it gives a slightly different picture, because this is the area the NASDAQ hasn't really tested in anger, really. But this area, now it has been tested. Obviously, this area here has been tested eventually. So when things start to jettison their way long, eventually they're going to come back and see the area they came from, or near enough at some point. And it may be sort of like quite some distance into the future. Let's look at the dollar index right now. And we're going to come to gold as well, mate, because I'm hoping that you're on board on gold, and you stuck to our agreement, our gentleman's agreement.
Yep.
You did.
I've cancelled my order, but let's have a look.
Let's have a look at the dollar. Same thing. You know, where's the areas that this hasn't tested? Well, if we have a look at the areas that it broke away from, broke through here, came back, did test it here, no problem. This area here broke through. Yeah, I think that would qualify just because of this high along here, so that's okay. This area here, has it broken and tested? Probably close enough, no problem. This area, nowhere near. So at some point, this is likely to see some kind of visit at some point. So
yeah,
dollar
you don't
index.
have to ask me about that one. I'll agree with you. You know, as long as the day is about that. Yeah.
Yeah. I mean, I think the dollar's coming down now. If we have a look at gold, which has been honestly what a hairy product to be involved in. This is what's been going on with gold. And don't get me wrong, everybody's looking at this and wondering where I got in. I got in early. I've been in this for some time. So when the price action's kind of drifting down here, I have tried to hedge it successfully once, unsuccessfully another time. So when it came down on Friday and started coming down to these points here, and it was getting way away from my entry, I was like, I'm going to leave this alone. I'm not going to hedge it. I'm just going to take the poison on it, set another level quite a bit below, and leave things alone. And actually, it hasn't come down to the lower level that I was looking for, because I would have bought it again. But now we're starting to push to the upside. Now, this is the area it's got to get through. If it gets through that area in this small area, there's patterns within patterns with gold. If it gets through this area here, the chances are we're going to see something of some kind of move. If that's looks like that's a pretty good channel line, that would suggest that this is the area that it's been bouncing in and away from. Those areas tend to be a measurement of where it could go. If it breaks out somewhere along this line, let's put it there, looks like we're getting somewhere near these highs again, then maybe a retracement, and we can make a decision. You said 1900, didn't you? So I might even clear out the position now. I don't know how frustrated I am with it. But the only thing is that gold has now given us some positive fundamentals. Very difficult to know what the fundamental catalyst is going to be for gold, because we know that the overprinting of money is effectively going to be potentially quite bullish for something like gold, because the dollar has got the chance of just collapsing. The way that they've printed trillions and trillions upon trillions of dollars, and not just over the course of the dollar's existence. We're talking in the last 10 years. The amount that they've printed of the dollar just weakens it. And how do they get out of that position? Because it's just not sustainable. At some point, something needs to happen to the money supply that gets us closer to parity. Gets us back to parity.
I don't believe they can get out of it. I think they're gone. I don't think they've got a way out.
I guess that's the point I'm making, mate.
Mm.
Is that if they can't get back to it, where does everybody go? They go to something which is certain. They go to something which can't be printed, and that brings me back to gold. So I would be looking for. So the longer term fundamental picture. If there's an argument, you can't say it's there, but there's an argument to say gold has got a good long term fundamental picture. But what's the short term fundamental picture, which is going to start to see us rally? Well, over the weekend we've had the nations, the United States, the United Kingdom, and the EU start to agree that imports in Russian gold will be banned, so they'll be sanctioned. So now we've got so we got a similar situation that we've had with Russian oil. So sanctions on Russian oil. We saw what's happened to the price of oil. It's not the only aspect, of course. We've got sort of supply issues and all sorts of things going on, but it was a factor that managed to kind of juice the move with oil. Now we might well get some juice in the move with gold because of the sanctions that are coming in from the states of the Gulf. They're basically trying to stop Russia being able to fund their war. So they're now attacking the gold haul. So so I like the case for gold now. I liked it before, and sometimes you just need something to happen and get in your favor. But maybe we have it. I can't say for sure, mate, because I don't. If I'm completely honest, I can't say I understand gold in the same way that I understand the FTSE. I understand that the way the FTSE moves, it is kind of my friend. with a FTSE. I understand the sentiment with the FTSE. Gold, I just don't have as much of an insight in, and that's purely a time thing. You can't spread your time so thin that you know everything, and you know enough about every product, because every product is so in depth that while you're spending time away from whichever you really know, like so say the euro as an example, to work on the yen, you're losing further information that you should be probably gaining about the euro. So the balance starts to sort of like come back down again. So it's just impossible to kind of cover everything. So the FTSE is where I tend to kind of remain. But every now and again I will dip into gold as I'm doing here. So gold I like, mate, as you know.
With gold, we're relying on conventional wisdom to get us out of or to hedge, I suppose, at the end of the day, which is, what it's been good for over time. And I can't disagree with you on any one of those points. I just can't. But what I can say is we're not in normal times. And I'm not sure we've seen it to this degree before, where what's going on from an inflation point of view can't be controlled by anything other than the world coming out of a war situation and or a COVID situation, because really that's what's holding everything back. It's a supply issue. We can't get the goods and services that we need at the moment. And no matter what the Fed does, from the way I believe things are happening, they're not going to fix this anytime soon. But that gold is also a part of that story. As I say, with conventional wisdom, gold should now be at, let's say, 3,000 or 4,000 or whatever the case may be, given the turmoil under which we find ourselves, and given the fact that the Fed and every other central bank, and I'll notice that we've got an ECB central bankers meeting going on this week as well.
Yes,
which is interesting. What comes out of that could be interesting. Whether they all get on the same page and say, "Oh, okay, we're in the SH1T," and I'm sure that's exactly what the conversation will be. What the hell are we going to do about this? How can we control it? But I don't think we're in normal times, and I just don't know that gold is going to act the way you would expect it to. And I base that purely and simply on because it's not there now. Why isn't it there now? What's the reason it's not there now? And I can't answer. It. I wish I had the answer, but that to me is interesting. If
you're absolutely right. Yeah, I mean, this position that I'm in might just be held and held and held. I just don't know, but I'm going to stick in there with it. Just on your point on the euro as well, I've looked at the data for this week, and the euro is basically sort of coming up as the sick kid. So shorts on the euro seem pretty sensible to me. But what I don't know, again, is a little bit about this timing, because you're right, there are sort of meetings this week, and Wednesday we got Lagarde out. So I wonder whether we might need to wait a little while before we actually see the movement with the euro, just to get a bit more clarity on what they're going to say. Because they're in big trouble. The United Kingdom's in trouble, but the euro's in trouble. The European, the eurozone's also in a lot of trouble. They just don't have the capacity as the other nations do. And also, back to sort of fundamentals, the United States is buckling a little bit. So looking at the dollar, I don't think I'd be wanting to go euro dollar. I quite like, your euro CAD makes sense to me. Euro Swissy would make some sense to me too. Possibly even the euro yen. In fact, I'd say the ones that make very good sense too. Euro Aussie and Euro Kiwi, but all for short. So Euro Aussie, Euro Kiwi, Euro CAD, Euro Swissy, they make quite a bit of sense to me to look for shorting opportunities. I don't know if it's before Wednesday, but that's what I'll be sort of like drawn towards. The seasonal.
I've actually got them all lined up on the bottom of my chart, ready to go.
Yeah, the seasonal pull for the Aussie and the Kiwi this period is strong, and that alone sort of like suggests, okay, that might drag them up, because actually the fundamentals from Australia, they're not too bad. Nobody's performing particularly well, but they're not too bad. But the European block, as I say, mate, it's just a shambles. They are very, very
Shouldn't
weak.
laugh. Yeah. Yep.
Yeah.
Indeed.
So
listen,
yeah.
We've eaten into George's time as we always do. So we better bring him on. And I noticed Simon's in the queue as well. Good to see him on board for a Monday.
Nice.
We're going to talk about how to trade this BTC thing. That'll be interesting.
Yeah.
Hello, George.
How are you guys doing?
Good morning, George.
Mate, fantastic. Thank you for your input yesterday. I thought I'm in total agreement with it, by the way. I think we're in short covering rallies at the moment around the world. And I'm looking to short everything I can possibly get my hands on.
Yes, yeah. I mean, so actually, just fascinating listening to you guys talking. I mean, this is a chart that the charts that I zipped through in like 2.5 minutes. Hopefully, it made sense there. The key thing, of course, like you said, these bad trends, the market selling off is what's controlling the market, and we're basically in pullbacks using our price action language. And I'm trying to find ways to go short. So quite fascinating listening to Ash. I'll look at the 5 minutes just now on the UK 100. But for me, we are in a sell zone in this whole area. So I'm interested to see what's happening on the 5 minutes, because now we're coming off or we're testing the 20 on the daily, which is a key level of resistance. If I'm down on the 5 minute, of course, I won't see the day's 20, but I know in that zone, I'll be looking for reversals. If it doesn't turn there, I mean, this lower high here is absolutely key. I mean, there's breakout pullback. That's where the bears try to resume again. Of course, they went into a trading range here, but that's still the controlling lower high for me. So in this whole area, let's just pop into it on the 5 minutes, exactly where we are at. So I'm looking for I'm gonna go short if it sets up, but now I've got to see all these confluence of factors that I look for. So actually, it's quite interesting that I'm not sure they said you jumped in, but you're probably saying going to go short, and you're trying to decide where to put your stop.
Oh
now.
No, man, I'm in. I mean, to be honest, I don't leverage, so stops aren't really an issue for me. It was more really for everybody else, where they put their stops, because I think if you're trading with stops, you're probably going to need to see more of a pattern. You can't just kind of go, there's the level, but I just trade levels. If I see a level that I like, I will just go short. So that's what I've done. I've gone short here, but I will also go short where that upper line is as well. I will just pinpoint that area. So, at some point, I suspect it's going to drop.
Yeah. So for me, already my mind is set as short. So I'm already saying to myself, if it sets up, where am I going to put my stop? So the first area, okay, that high, that low, measured move. So that's an area I'll be looking for the short when the pattern sets up. Now, when I say pattern, I'm looking for 3 distinct pushes, but they could have all sorts of other patterns in. So this for today is one push up, although it's a trading range. So we might go sideways, go up again. That will create the second one for me, whether we come down or go up. But when I get the 3rd distinct push, then I'm going to look to go short. And that's the first area of a stop. But of course, if we create a trading range again within here, then I'll just get my little friend tool here and say, well, okay, got a trading range in here, and that's where I put my stop. So
George, can I ask why you start your counting from here? Like, why wouldn't the previous range be counted as the first push up, for example?
Which one here?
Yeah.
So this is yesterday, Friday, right?
Yeah.
This green is a high of Friday. So I'm interested. Of course, I do see that, and I can see that the bulls try to break above that. So that's a level of resistance that's creating this. But I'm interested in the attempts in today, what's taking place today.
I see. So it's always on the day by day basis.
On the day, yeah. But that level is absolutely key to see how we reacted to that. Let me just show you what I mean by, let me just see, I'm putting all the charts back up again. If you ever look, this is Aussie 200 here. Okay, so these levels, when I drill down to the 5 minute, these levels in gold here are very key for me, but they're not occurring today. You know, this is what happened. This was a little bit of a gap here, and this was a breakout point from the previous trading range. So when these appear, although they're not on the day, they're very key because they're levels of resistance that are in the market. So if I was looking at the Aussie 200 and I am on the 5 minute, then I'm going to be seeing, okay, the easy high of Friday, try to break above, failed. This is very key because the bulls didn't give us a bull candle and follow through. So the bulls already are showing weakness here. Then, I mean, that's beautiful. One attempt to go up, 2, 3, so fantastic. Then we're creating a trading range.
Oh, interesting. Okay.
So if it sets up, stop would be here. Now, this I know at some point where it backs gap down of 10th of June, so key level of resistance. So now, already I'm saying, here's a little bit of the fun of this thing. So there's 3 pushes up, but we've gone sideways to create a trading range. So this whole pattern for me is saying bears are strong, but I now need to see them completely failing. In other words, the bulls failing and the bears are setting themselves. So if market turns here, I'm not going to be surprised because this gap down is a key level that the bears want to defend. So if we accelerate up there and then we get bears coming down, then I'm like, okay, happiness, lower high, take a trade, stop up here.
Got it.
So it's kind of just this little step by step and keep building up the story. So
will your stop be there regardless of where you enter? And that's your stop area, solid. You know, you've worked that bit out now, so that's your stop area. Or will it be induced by a pattern, a new pattern?
Okay, so good question. So the first trade that I take, because I'm clearly trading a reversal trade, 40% chance of success, 60% goes into a trading range, or I might get stopped out. But if it works, big rewards. So the first trade is always at a measured move because I might be wrong. It might get up there, come back, and they might try another push. So give myself a bit of leeway. But if we get up there and for any reason I don't take it, let's say I don't take it, and we come down, we create a lower high. I've already seen where I would have taken the first trade. Now a lower high, I'm not going to put a stop up there. Now I just want a very tight stop because I'm saying this whole pattern is now going to hold. So tighter stop, and then we start to go. It's this first trade that I'm really careful about because there might just be another attempt to go higher. But as soon as we start moving, we're out of reversal. We're now looking for the breakout. Then it's tighter stops all the way down.
Cool.
Okay.
So
nothing is yet set up. So we're just gonna watch and watch and watch. And who knows, might set up now or later in the US session. But we'll be here.
Yeah, cool, mate. Thank you very much. Any thoughts on gold?
No, nothing. I don't even have it up at the present moment. Yeah. All right.
You've sacked gold, haven't you, George?
I have sacked her, full of luster, but not giving me much profit. So
yeah,
no, it's very frustrating.
It's a tough one. It really is a tough one.
Yeah. So yes, so that's where we are, and we'll see you guys live trading profits on Wednesday, 9:30 GMT.
Is this the GMT day? On Wednesday?
This is the Wednesday, the 45 minutes on this Wednesday. The big one is the second Wednesday. Oh, we're still far away from that. So we're still on 45 minutes only on Wednesdays, 9:30 GMT.
Superb.
Thank you very much, mate.
All right, guys.
Thanks,
Take
mate.
care. Enjoy the show. We'll catch up.
George. Have a great week.
Bye, George.
Bye-bye. Take care. Or do I do oil? Someone's asked. No, I don't trade oil. Now, when I say I don't trade any particular market, it's really got nothing to do with the fundamentals behind it. It's just that I'm looking for markets that give me a clearer edge, a clearer sight of price action patterns. I mean, we could pull up oil or gold and analyze it, and it would sit on my charts until such time as I get something to trade. So it's just purely because of I want the simpler life.
Yeah, it makes sense, mate. Well, this is really what I was saying about, you know, being familiar. When you're familiar with a product, then looking at other products to try and get that familiarity, you actually, you know, you're diminishing the familiarity you had with the original product. So it's kind of better to kind of like get a group that you're really comfortable with, rather than going everywhere. In my opinion, anyway, rather than sort of like, you know, spreading the net everywhere. I think it's a good idea just to kind of have a group and understand, because markets do react differently from the next one. They all have a specific anatomy, don't they? And the way they move, because they all exist in a slightly different environment.
Yeah. So I mean, for me, I gravitate. You probably have picked up the sense of it. UK 100, German 30, Hang Seng 50. I mean, those I'm really looking at actively. I've got the other charts on because, you know, part of my capital that I allocate, a percentage, is I'd like to allocate to take some daily trades, you know, very small fractions, but I just can't find these setups that I can just put and forget about it. But the bulk of the capital that I trade each day, 2/3 of it, is really just narrowed down to those markets. If I traded 20 hours a day, then I would swing through and put the S&P 500. But I'm really interested in the S&P 500, just those first couple of hours when the US markets open and the UK, European are closed, because thereafter I'm shutting down and doing other things.
But if you traded 20 hours a day, you would be in a white coat and a padded room.
And I'll probably be trading with one hand because the other one will be chained down, right?
Yeah, exactly. It's not a profitable thing to do, I can assure you. It doesn't work.
Yeah.
Time in front of the charts is great over a long period of days, weeks, months, and years. Not 100 days in a row at 24 hours doesn't work.
Well, I mean, it's all the psychology, right? I mean, I don't trade Fridays. So Friday, Saturday, Sunday, I'm off. And Monday, I'm in the market from the open of the this session that we're in. But then I really pump out Tuesday, Wednesday, Thursday. But that's it, you know. So I do take long breaks and really have a good quality of life, because I want to do this for as long as possible. So,
indeed.
Yeah.
Work hard while you're there, and you do. I know that very much so. Again, have a great week, mate.
For sure. We'll catch up with you next week. All right. Take care.
Thanks, George.
See you, mate.
Yes. Bye-bye.
Righto. Let's, unless you've got something, Ash, to update, let's go directly to Simon and say good day, mate.
Good day, guys. How are you all?
Oh, you look bright and breezy for a Monday, actually. Not normally.
Can I get some power, please, Marlon? Is that all right, mate? Oh, hang on. Host disabled participant screen sharing. So another go. Screen share. That's better.
Hey, Ash, how come you're so bright and breezy? Do you have a late evening with IFP?
Do you know, mate, I've had a weekend of it, haven't I? I was up at midnight every day and worked until 11 a.m. So I don't know, honestly don't know. I don't know. I should be on the floor, but I'm all right. I don't know, mate. Do you know, it's a funny thing with IFP. It would normally hit me on maybe Wednesday. It doesn't usually hit me on the next day, but on Wednesday I sort of, you know, I'm starting to readjust again, and it sort of it does get me a bit, but yeah, so far I'm all right.
Just while you're getting sorted there, Simon, if there's anybody in from IFP, and I don't know if that's the case, over the weekend, and you're finding this completely beyond your scope, that's totally understandable. And if you are, then don't be afraid to ask questions at any time. Just throw them in the chat box and we'll deal with them. Absolutely. This is your show, not ours. It's all about sharing. So please share, even if there's an issue and you don't understand. We're not here to spook you or to put you into a world of the unknown. It's all about understanding. So if you don't understand, ask questions. Simple as that.
Which we've all been in, right?
You bet.
Yeah, he's got to stick in there. Oh, not short of jet lag, Lewis. I've probably got a bit of that as well. Lewis was there actually on the weekend.
Jeez, do you feel that? Were you insane?
What's that, buddy?
You were in Sing this weekend?
No, it was online. It was online.
Right. So you did not.
Yeah, he was in Sing. I was in the UK, which is probably worse in a way because my, I am actually having to get up at stupid o'clock.
British Bulldog stamina. That's what it is.
It must be that, mate. It must be that.
Let's get cracking with a little bit of a bit of crypto. We're gonna learn how to short today, as we've been talking about. But I just wanted to do this one thing with you guys first, and this is I'll call it the seasonal ETH Bitcoin trade once a year. If you're busy, you don't do anything, you're not really into crypto, but you like the strong big layer ones, the Bitcoins and the ETHs, and lots of people, that's all they ever want to trade. They don't want to trade anything else, and I completely get it. I understand it completely. So once a year, every year, it seems, what for me anyway, from now on, is around about the end of May. I will transfer or rinse or sell all of my Ethereum into Bitcoin in May, because I'll show you why. Because this is if you like, it's the seasonal ETH Bitcoin monthly returns table, and you can see that the back end, or the last 7 months of every year is Bitcoin time, and the first 5 months of every year in general is ETH time. So just by swapping all of your ETH into, or not all of it, as much as you want, half of it, whatever, into Bitcoin, or around about the last week in May, and flipping it back around about the last time in December, always seems to be a pretty good trade.
It does look good, mate. It's there is a gold silver spread trade.
Yeah.
Ratio, the gold silver ratio, and when it gets sort of like around about the 85-90%, people sort of like tend to flip to silver, and they sell their gold. Is there something similar with ETH Bitcoin? Is there an ETH Bitcoin spread trade where when something gets in that upper range of value, then there tends to be a flip?
Yeah, I'm unsure. I don't think so. Every year you'll hear crypto buffs telling you that Ethereum's going to flip Bitcoin. It's never happened yet.
I don't mean as in the price. I mean as in the ratio. So do they sort of have a particular ratio when, let's say, you can buy, I don't know, 60 ETH for a Bitcoin, then it tends to be sort of like at the top end of the ratio, and when you can buy 30 for Bitcoin, it tends to be at the lower end of the ratio, and they tend to meet somewhere. There's a median line. Yeah,
not that I know of, but I know where you're coming from. So
right.
On this one, because we wanted to do some short and work out how we use some of these exchanges, because some of them are a bit of a pain in the ass. So this is my trade, if you like. Just before we did the online trading retreat, I rinsed all my ETH into Bitcoin. It was around about the 31st of May, somewhere around here. And if I go onto my Binance spot account, my fiat and spot account, and we can see that the Bitcoin this is the Bitcoin that I'm now holding that was ETH.
Right.
So if I'm lazy, okay, and I want to put my trade in now and say, do you know what? On the 31st of December, I want to rinse it back. So I can come up here, I can go to the trade button at the top. I can find the spot market here. I'm going to click on spot. And you can see, well, I think we spoke about this on Thursday. I've got a load of Bitcoin buys in on limit orders. I want them to come up, and I know I'm in the right place. Why are you being so slow today? Okay, there's those. One of my 4 Bitcoin buy orders got filled. There's the other 3, so they're all lined up in my open orders, if you like, waiting to be filled. There's one at 13.5. That's one at 15.5, and one at 17. So there's my 3 limit orders waiting. But right now, we want to set up ETH, BTC, find it in the list. I highlight mine yellow, the ones I use. Just put a little favorite number on, so they come up straight away. and I'm going to set this up because what my real goal is to basically double my amount of ETH. So by rinsing it here at let's call it 0.07 and rinsing it back at 0.35 will double my ETH stack.
Yeah.
If that makes sense. Yeah.
Yeah.
So based on that I know, we are going to at limit. My Bitcoin number was, bear with me guys, it was 2.28. So I've got 2.28 Bitcoin, and at let's go back quickly. We can do it on this chart, can't we? Yeah, there it is. Look, there's my two green lines. So 2.28 Bitcoin. 100% of my Bitcoin. If I only want to do half of it, I can just move the slider around. If I want to do 25% of it, I can choose my own amount that I want, what I want to swap. But I want to swap 100% of my Bitcoin back into ETH when this price, or before, or depending on when that is. If this comes in, around about September, yeah, I'll probably still do it. But I'm looking for the long play will be into December because the seasonals tell me that. So the number is, the green number there is, let's call it 0.0035. So price 0.0035. So if once I press this buy ETH order, which I'll do in a minute, when price gets to 0.035, my whatever it, let's call this, make it 100% again. Sorry, guys. So my 2.28 Bitcoin will turn into 65 ETH. When I made the trade, the ETH I had was 32.5. So I'm doubling my ETH stack by rinsing it back when it's entered. So all I'm going to do is press. Make sure I've got a limit order. Make sure I've got the right amount. 2.2 Bitcoin. I'm going to get 65 ETH for it when the price hits 0.035 sats. That's there. That's bang on. I'm going to press buy ETH. And what that will do, it will create another limit. So there's the fourth one. There's my 3 Bitcoins, Bitcoin USD buys. There's my ETH Bitcoin buy. If I leave that in there, that will get triggered. I'll leave it in there for now. But that's just a nice, simple spot, non-leveraged, not difficult, easy to do on Binance. Not difficult at all.
With this, you'd have to own the underlying assets. You'd have to own ETH to be able to do this particular trade.
In this particular trade, you have to own the Bitcoin, right? So we're swapping our Bitcoin, so you have to own the Bitcoin.
Yeah.
Into ETH, and then when you've got the ETH in December, you've then not got the Bitcoin. So you're just swapping ETH to Bitcoin, ETH to Bitcoin, ETH to Bitcoin twice a year, and stacking the pile.
I got it. So is there a way of being able to trade Bitcoin and ETH without actually owning, so we're actually sort of talking about in similar way that we don't own the CAD when we sort of like trade it on MT4.
Is there a way to
actually trade the movement of these?
Yeah.
Before you do, Simon, if you could just let us know, where's that heat map come from? Is that your own creation, or is that available somewhere?
No, it's someone else's creation. It's an ETH Bulls creation that's worked it out and shared. Actually, it's Ben Cohen's creation. You know him, right, Ash?
Cool.
That's the Benjamin Cohen creation. So
okay,
that's really cool, mate. That's really cool. So he's basically done a seasonal analysis of it, and he's releasing that to his members.
To his members only,
right. So therefore, you would have to be a member to get access to that. That's all. That's all, mate.
Okay, so that's where I do this. Binance is where I do most of my spot trading. Most of my trading is spot, and I want to be clear on that because what we're about to look at is the complete opposite. And extremely high risk and lots of leverage. So this is where I spend most of my.
I understand. So makes sense. So actually, you're trying to get away from the leverage, which is why you're owning the underlying asset. Because if it all goes wrong, it doesn't matter. You still hold the ETH or the Bitcoin. Yeah, I got it.
Correct. So what I do is with the profits that I made on my spot trading, I fund this account. This is a Bybit account. It's a Bybit derivatives You can buy spot here. It's a Bybit. The only reason I use Bybit is because you don't need to KYC as it stands. If you don't trade more than 10x leverage, anybody can do it.
Okay.
And this is where I come and have lots of fun, but only with the money that I made from a spot account. So it's money's made. I don't consider them mine because it's high, even though they are. It's a high risk. It's a high risk strategy for one. It's a high risk arena for two. Anybody that knows anything about leverage knows and has played with it knows how dangerous it can be in the wrong hands. So 19,209 USDT in my Bybit account. I'm going to show you how to place a short. Before I do that, I am going to take you to a couple of trades I did last week, which went to explain. Let me find the first one. Let's go. If Bitcoin done that, let's go to near protocol. Took it on the 30-minute, and we'll show you. We'll take it again. Yeah. Okay, 30-minute chart. So when I'm messing around, when I trade with leverage, not for fun, for real, because I really enjoy it. I'm super zoned in, super switched on. If I'm not super zoned in, if I'm not in the zone, I don't do it because it is high risk. Can get a bit nervy at times, but I also remember that I'm playing with someone else's money, even though it's mine. I don't consider it. You know, I'm still going to eat. I'm still going to sleep. Life's going to go on if something goes horribly wrong. I use tight stops anyway, so the concern levels aren't that big for me because I believe my risk management skills, if you like, in this leveraged arena are as good as I'm going to get them. So this is a simple little strategy that I find in the 7 years that I've been trading and using it, and using it indicators and using everything and just going through it all. I find for me, the less complicated it is, the better I am and the more profitable I am. So I try and keep it simple. And all I'm doing, for one, I only trade these pairs at this time of year. The only obviously I've got Bitcoin charts. I've got a Dixie chart. I've got an ETH Bitcoin chart. I've got a Nasdaq chart. I've got the stuff that I need to look at, the macro stuff that I need to look at to keep it. But I've only got probably a dozen crypto pairs here that I will trade because they're the ones that everybody trades. They've got liquidity, and I understand them. And like Jeff was saying earlier, or one of you guys was, like, you start learning how stuff moves, don't you? And I can point through here and go, I know which ones I like shorting because they just work for me. Avalanche, it never lets me down on a short. So you start building up a rapport, right, with your
familiarity. Yes.
So for me, it's a real simple methodology. Bitcoin leads the way. If Bitcoin says I can trade, I can trade. And whilst I'm not going to show a Bitcoin chart up here now, I will tell you it looks very similar to this. So I'm tracking a 1 hour chart in an uptrend, and I'm waiting for that trend. This is not a really good example, but I will show you anyway, to break. And as soon as that trend breaks, as long as the same trend line, because it will be very similar, has broken on Bitcoin, and it's given me the signal to say Bitcoin's going to break trend and it's going to go down, then I can short anything else. I won't short Bitcoin because I will short Bitcoin, but I prefer shorting these things because they move faster. So as soon as I get a break of trend, and I consider that a break of trend, that's 5, 1, 2, 3, 4, 5, 6 hours outside of it, I'm going to put my fib on the top. I'll get that out of the way. I'm going to put my fib on the top.
No, I really like that, mate. I think that's a really, really good barometer. So if Bitcoin is broken a similar trend line on a similar time frame, you can flip to some of these smaller ones because they're more volatile, which means that you're going to get a quicker reaction from them and potentially make more money.
Correct.
That's really interesting. That's really interesting.
So what I do then is I'll slip my fib on from top to bottom, and I've got this golden buy zone, and this golden buy zone sits between the 618 and the 786 fib retracement, and it's the only box that I will buy in. So once I've made that, I'll put my box in. There's my gold box. That's my buy zone. I'll get rid of that because no one wants to see that. It's in the way, and I will set myself 2 limit orders. One at the bottom of the box. So in this instance, let's call it 424. And I will trade 25% of my entire account on that one entry at 7x leverage. So if my account is, as it is now, say 20K, and I'm going to trade 25% of it, that's 5K, at 7x leverage, that's a $35,000 position 1 entry. The second entry, I'm going to do the same again. It's going to be a 25% of my account at 7x leverage. So that's another, whatever that was before, times 2. Let's work that out. That's about let's do it again. 5x 75, 5,000 times 7, 35. So that's a $70,000 position without, I mean, this is where the risky bit comes, right? Without any reversal signs or anything that tells me I can go short. I'm just in this box. This box tells me I can go short. I'm in this box. I need some confluence. I've got my trend line. It's the reverse side of my trend line. I have further confluence in that my stopped RSIs are at the top. So that's met my criteria. I've met my criteria by being in this box. I've met my criteria by retesting the underside of this trend line. And I've met my criteria by putting in a lower high, assuming I'm right. If I'm wrong, let me put one of these on it. If I'm wrong, and generally when Bitcoin goes, and if I get the Bitcoin bit right, I'm generally not wrong. If Bitcoin's right, I'm normally, if I'm right with Bitcoin, I'm right with everything. Not all the time. That sounds like I'm always winning. That's not true.
So really, the money that you're using for this is money that you've made really sort of like through trading already. It's not money that you would add from an outside job or anything like that. This is money that you've made from trading already. So it feels like it's free money in a way. So you're just taking that free money and then you're trying to supercharge the free money by putting 25% of the account and the leverage, which sounds amazing, mate. My only sort of alarm bell is that if anybody's listening to this and they're new,
yes,
because even if you'd sort of like, you've made that money through trading, for somebody to then do this and then potentially lose, because they'll lose big if they're going to be trading at 7 times leverage at 25% of the account, that the propensity to then go chase that could be quite high if you haven't understood what you maybe have gone through as a process to say, do you know what, that literally is dump money. I don't care, because you can't care about it, really.
No, I don't. You can't.
Yeah, so you've got to be sort of like to say that is literally money that I am pretty much saying it's going in the bin. So let's do something cool with it and see if I can actually juice it up.
I've considered it lost. As soon as I put it in Bybit, I consider it lost.
Yeah.
But you just done the last section of my presentation for me. So thanks for that, because I was going to come to
Sorry,
that.
mate.
Thanks for that, mate. So all I'm going to do is put I need to find out what my stop is, right? That's the most important thing to me. If my stop's too high, I'm not doing it. So I'm going to put this little device on, this red and green box, and bearing in mind, how do I get rid of that? Can I get rid of that? Let's get rid of that. Move it over there. So bearing in mind that I've got 2 entries, one at the bottom of this box, one at the top, my average entry is going to be in the middle. So around about there, if they both get entered, my average entry is going to be around about 427. If I pull this red thing down to get that out of the way, hey, get out of the way, you. To the top, my invalidation point, right? Because after that, I do not want to be in this trade. I want to be out. It shows me that I've got a 3% stop. My target probably going to be somewhere down here. So I've got a 4.28 to 1 ratio. Let's cut me. Obviously, it went there, but my target would have probably been there, the top of that probably about exactly where it was. So I'd have hit that one. But you can see, so I'm risking 3% of And what was those numbers again? 25% of my account, 5 grand times 7x leverage is 35. So that's 70,000, a $70,000 position times 3%, whatever that is, quite big, times 3%.
20 grand.
So it's a 2,000 stop loss. Now, as soon as I get my entry 1 and my entry 2, I don't always get them both. Sometimes I only get 1. Sometimes I don't get any. I don't get there. If I don't get there, I walk away. If it didn't hit my target, I don't do it. As soon as I get this big candle, let me get rid of these blocks because it might make it easier to see. As soon as I get this big bar, my second entry, and I get that nice pin bar, my stop's coming right down on top of that candle. So immediately, where's my thing? There's my entry. My stop's coming right down on top of that candle. So from 3%, I'm bringing it down to 1.7. So I've almost halved my loss already if I'm wrong. And so that's 50% of my account in play with leverage. And as Ash just said, this has got to be money that you've thrown it away. That said, my risk is still only less than $1,500. So
yeah.
Whilst that's high, that risk never gets any bigger now. What I'm going to do is I'm going to show you how I would set those 2 trades, based on using Bybit. So if I've got my 2 entries, the first one being, let's call it 424. The second entry, second fig, let's call it 430. And my stop loss on the top of their original, let's call that 440. So it's a 440 stop loss. So I'm going to jump into Bybit. So you guys know where it is. I don't really want to show you because I don't want to encourage anyone to do this, especially if they're new. But we are in USDT petrol futures. And I've got to find what was the pair. Anyone see what the pair was? NEAR. So I'm going to jump in here and I'm going to type in NEAR. This is NEAR protocol. I'm going to put a yellow dot on it because it's one of my favorites, so I want to keep it. There it is there, NEAR USDT. First thing I'm going to do, I'm going to make sure my leverage is right. So the leverage that I'm going to be using, it's going to be short, is going to be 7x. So there's my short leverage box. It gives me this window here. You can see them both defaulting to 10. They like doing that to you because sometimes people forget and they'll just trade it at 10x leverage.
Indeed.
You can take all of these right up here. That's just called suicide and giving your money away. Just don't do it. 10 is my absolute max I've ever used. And even that's too much for me. So let's call it 7. So notice that's the long box. I've got the wrong one. So you've got to keep your eyes on what you're doing here. So 7x short, 7x long. This is across an isolated box. So it's quite important because if you've got more than one trade open and you're trading 2 or 3 different pairs and you've got the cross box, the cross margin box ticked, it's going to allow you to use the margin that you have over the whole account. The whole 3. So if one of your trades goes badly wrong and you're not protected properly, it will wipe out your whole account. Whereas if you're isolated, which I'm always isolated, it just to that pair that you're trading, right? So we're trading NEAR USDT. We're trading it isolated. We're trading it at. Let's get that back again. You watch, see how quickly they move that without you knowing. You just got to be on your. You've got to be on your box, 7.5, 7.5. I don't need to change them both. I need to change the short one. Okay, and I'm going to confirm it. And you can see in the top right where the short box is, it's changed to 7.5x. So my leverage is 7.5. It's a limit order. I only ever place limit orders. Bybit pay you to place limit orders. So because you're adding liquidity in this order book, you're known as a maker. So as a maker, they rebate you 0.25% of your trading fee of whatever you're going to pay at the end. If you buy or sell at market, you're a taker, and they charge you a fee instantly for buying at market. So I don't like buying at market anyway. I'm always a limit buyer. It makes a difference to me. So I am selling short near USDT. My order price is, the first one was 424. So 4.24. I'm trading 25% of my entire account. Entry price is 424. I'm at 7x leverage, and I'm going to open that short. Notice there's no stop loss in here. I will put that in. I always put them in afterwards, but you can right now buy long with the TP, short with the stop loss. So you can put your stop loss in straight away just by putting the number in there. But I also find it easier to do it afterwards. So I'm going to open that short, and it's going to pop up. He says, okay, I'm going to confirm. There's my order price, 424. That's the quantity of near tokens that I'm buying. Quite important. So I'm buying 8,413 near tokens. My order cost is 4,802. With the leverage on top, the actual price is 35,675. So I'm trading $31,000 or $30,000 of somebody else's money. It's not mine, because I'm using that leverage. There's my liquidation price estimated. I'm going to confirm that order, and it's going to pop down here in the whatever you call these things as an active. I don't know why it says that. I find that confusing. You can see it in there. It's set up.
Yeah.
Why they call
It's
it
contradictory,
active,
isn't it? Really? Yeah.
Yeah, it's not active. That's the whole point. So but once it triggers, it just pops into this one, and it'll be live in here. And once you're in here, or even now, I can go. There's a little box here that says TP stop loss. So I can go and add my stop loss right now if I want to. My stop loss was what, 440. So stop loss 440, 4.40. And it tells me at the bottom, my stop loss is 440. Your expected loss will be 1,346 USD dollars. I'm going to confirm that stop loss, put it in. That's now in. It shows me it there. My stop loss is at 440. It also puts a green line on my chart to tell me where that is. Sorry, a red line down there. Look. And this is what I love about Bybit. I can't do this on any other platform. You can drag and move this stop loss around, which I think you guys do that in FX, right? But can you do that on MT4?
You can, yeah.
Right. You can't do that on a lot of crypto exchanges, but you can on Bybit. It's really useful. So I've got stop loss in. That's my first order. That was the bottom of that box. That was that order there. The second order, 430. Let's go back and put that in. 430. So make sure your leverage is right. It hasn't changed. It's 7.5x. That's fine. This is 4.30 for order number 2. 25% of the account. I'm going to put the stop in afterwards. So I'm going to open the short. You'll notice how it's changed in size. The last one was 4,700. This one's 3,600. That's because 25% of my account now is smaller than 25% of my account was when I put the first trade on. So I'll open that short. There's all my criteria again. Confirm that. And I've now got those 2 entries sat in that active, in a ridiculous active box. Notice the second one hasn't got stop loss. It's quite clear when they make it nice and simple for you to see, oh, I don't have a stop loss. I'm going to add that again. What was it? 440, 4.40. Confirm. So I've got 2 trades, waiting to order, waiting to execute. Let's go back to there. What else can I show you?
Well, do you know, this is really good, mate. One question I've got is that would you need to buy USDT before you can do this anyway?
Yes, or you can trade with US dollars.
Oh, you can. So you can trade in a fiat currency.
You can, yeah. I get it. No one likes USDT. I completely get it.
Well, it's not so much that, mate. I mean, it's more the fact that you know, if you're a UK resident and you just want to trade, you just want to speculate on the movement of something. You can just dump your money into a broker, like Axie, for example, and you can trade currencies. And I was wondering if there's something similar with cryptos.
Okay, you can, but not on leverage because that hasn't come up. I think there might be like a margin account where you can do that.
Yeah.
one of these. Not been there, but I'm pretty sure you can. I've heard someone say you can trade with USD or USDT. So until that enter, I'm going to cancel it anyway because I don't. If you're halfway through a trade and you want to take some profit, lots of ways to do it. Me personally, I'll just select the trade I want to take some profit on, and as it's a short, I can just buy 50% at market. So I can hit the 50% button there, and I can just buy 50% at market and close half of that trade if I want to. I can drag my stop losses around. I can run a trailing stop loss, which I've never done, and I don't know how to do it, but I imagine it's going to be something like, okay, you can't add the trailing stop loss until your trade is activated, but you can set a trailing stop loss to take your profit when price retraces X number of dollars.
I've never really understood them either, mate. I've seen the trailing stop loss, but they've made absolutely no sense to me, really.
No. The trailing stop loss that you guys use makes perfect sense. It just tracks dips, right? Tracks and buys dips. This thing is just
probably. I mean, even that. Yeah. I mean, I'd want to see price get to a point before I move my stop. I wouldn't want to say, every time it goes down 20 pips, I want to get my stop down there. It's a little bit too defined for me.
Me too. I don't use it. I might use it if I was doing. Do you know what? I wouldn't. I'd just take the profit. I wouldn't bother.
Yeah. I really like this, mate. And do you know what I really like is the open door to these different cryptos that might actually be worth speculating on their particular movement. So if you get any more of these kind of short-term trade things, these short-term trade opportunities as we go through the shows as we go forward, this will be amazing. I really like this.
Yeah, okay. And I just saw this big copy button here, and I think I've never seen that before. They just added a copy trade, so I think you can set yourself up and you can probably sell your strategy for $20.
Yeah.
But yeah, this is what I trade every day when I've made my money on the other side, and I'm happy and I want to have some fun and I want to get zoned in. This is where I go.
Really cool.
You can double your account in a day, and if you don't know how to manage risk properly, you can lose your account a day.
Yeah.
And I think we probably should reiterate, if you're new to trading, ignore everything you just heard and put it in for future reference column. I think. Yeah,
or if you're bored at the weekend and you've got a spare 50 quid, throw it in a buy bet account, and imagine you're going to the casino and you're spending 50 quid on a roulette table, and then you can just practice, can't you? You can practice managing that stop. That's the most important bit. Just practice the risk management, because without that, you will lose it.
It makes a lot of sense.
I was a bit dubious about doing this today because I didn't know if we had any newbies on or whether.
Oh, do you know what? I think it's okay. I mean, everybody in the show is an adult anyway, and they I'm sure that there's an aspect where you guys listening understand that there are different approaches to trading, and this is just very, very high risk. So it's all right, mate. And I think we in a way we need to show this kind of thing anyway, just to kind of show that there are dangers, as long as we discuss the other side of it. I think it's fine.
Yeah, I agree.
Thank you, buddy. Okay. Well, let's. We're getting close to. We're way beyond actually. Going to pass back to you, Jeff. But I don't know if you wanted to quickly do a run through, or whether you want to leave it till Thursday. Where we at?
Look, I don't think there's anything too important to share at the moment, but let's do that anyway, very, very quickly. Lewis, is that the structure that you were talking about, mate? And if so, false break here looks really good, doesn't it? And I think that trend line is a good one anyway. At the end of the day, yep.
Falling wedge is pretty bullish, so that's the only problem.
Yeah, that's true. That's true. I don't necessarily agree with that until it's proven, but as with all patterns, until they're proven, they're only a guide at the end of the day. But my guide at the moment telling me a false break here makes perfect sense, as would maybe a test of the monthly pivot and pull back to that level look like a long. I get that as well. But structures are there to be either contained or broken, and either is acceptable. I really don't care which way it happens, as long as it tells me. If it tells me at the time, that's all that counts, really.
Yeah.
The ones that I was really interested in, we spoke about EuroCAD earlier, and really what I need to see here is a false break of resistance, and that level that we spoke about up here as well, because again, this is a clear structure to me. Also, that broadening pattern is exactly the same as what we were looking at before. I need to get that a little bit further down, but you get the picture, I'm pretty sure. And I'm looking for the top of that to come off and go back to the bottom. That's why I haven't traded that weekly chart as is. As I said earlier, the Euro pairs are just lining up for me at the moment. This one notwithstanding, we've got a bearish engulfing bar. They've gone into range. And interestingly, I think if we get a breakout to the top of this range and fail to take out that high, I'll be shorting that very, very quickly on Euro Aussie. Euro Kiwi could really trade it at the moment. And the reason I say that, if we have a look at the bigger picture here, those of you who know my patterns that I like to trade will recognize here a little pattern that I like. You could either use this side or this side, but I prefer this side. And it's important to know why I trade this. It's a false break of a range 3 times in a row with higher highs, or going in the opposite direction with lower lows. It tells me most often that that range that we've just had false breaks of, 3 of them in a row, 1, 2, 3, is telling you, and George spoke about this earlier, he likes this kind of scenario, different way to me, but he likes this scenario as well. I feel that this and I can't give you percentages, I've got no idea because I don't keep stats like that, but this generally will break to the low side of that range. So if I can get in up here, that's right, mate, that's exactly right, the 3 little Indians. So if I see that setup and I can get into the market here, I can almost see the end picture as being down here before I even have to take profit, really. So that's a really good scenario for me. And if it does follow through, which it often doesn't, it'll only break the level, find a support, and then it'll go back to trend. But it is a very, very strong pattern. It's had a good level. We've had this as resistance many, many times before, and support. So I am expecting this to go short. How you get into that is entirely up to the patterns that I see. And on the 4-hour chart at the moment, I see a re-entry into the level and I see a retest. So it wouldn't surprise me to see this breakdown here. Where do I put my stop loss? Where's my risk? That's the problem that I've got on a 4-hour chart. I'd probably have to put it up here. But tomorrow morning, the trade's not really there on the daily chart just yet. So I'm just patiently waiting. But my analysis says that this will break this level to the downside. Again, how far it goes, I don't know. So that's kind of the theme that we're in. Euro pound, as you know, we've got a short underneath here, and Aussie Kiwi is just below entry at the moment. We're still in a little bit of profit there, having taken TP1. I've got no reason to do anything else. Pound has broken that range to the high side. We're below entry at the moment, expecting maybe an ABC scenario here, but it's not evident on the daily charts, the smaller time frames only at the moment. So that's pretty much where I'm at, mate. There's nothing more.
Well, I think what looks quite interesting there is that you're looking for a lot of setup short in euro, and the fundamental picture looks pretty poor for euro. So that looks good to me. And also Wednesday, we discussed Wednesday being a potential key day for the European for the movement in the euro because of Christine Lagarde's speech. See what she's got to say. Well, let's wrap it up. Thanks so much, Si. I think that was really in depth, and I think going forward to see some more of that stuff would be amazing. And obviously, big thanks to you, Jeff. We'll sort of continue to look around the FTSE 100 just to give you an update. You've probably been stopped out if you're in that trade. I am going to stick in there and see if I can get maybe another 1% move higher before I add to a position short. But I'm sticking with the short. I think that there's a decent chance we're going to come down during the week on the FTSE. I don't know when, but I think they might come down this week at some point. But the market looks pretty hot at the minute, looking comfortable anyway. And it doesn't look like we've got any data releases as yet today, which is going to drive us short. So probably if you've taken a trade in the FTSE and you've been stopped out, maybe better to sit out until at least tomorrow, maybe even Wednesday. We'll see if that's the key day. But have a good week, guys. Stay safe out there and enjoy yourselves. And thank you to Simon and to Jeff for being, and George, of course, for being our trading buddies, and all of you in the room as well. We'll see you on Thursday.
Happy days. Yeah, thanks for being our trading buddies. Thanks, Simon. Thank you, George. Thank you, Marlon. Good to see you back, mate. And Lewis, I am having a look at those smaller time frames, and I'm watching these indices like a hawk, because I think this is an excellent opportunity to get back into the shorts. We will see come Thursday. We hopefully will be in them. Have a great week, everyone. Bye-bye.